Okay, hold on. All right, so we're gonna get started nonetheless. All right, and I'm gonna try to. I'm gonna start by telling you, briefly why I've decided to do this. All right, over the last couple of years, I've had all kinds of people that have approached me to request for, Mr. Freeman, do you have a free mentorship program? Do you have, you have a training that, you know, those who cannot afford, the premium mentorship, which is the lifetime mentorship, do you have something for people like that? And oftentimes I just tell them, oh, just watch my YouTube videos. At least a lot of them are informative enough to help the average beginner, find their foot. However, in the last couple of months, as any Nigerian will tell you, um, things I things have been crazy. All right. I don't want to go into details, but trust me, things have been crazy economically speaking. So this is one of the best ways that I believe I can give back to the society. So that is why we're having this currently as a free training, and we'll follow it up with a couple more incentives as time goes on within the community, the Telegram community. So having said that, guys, welcome, welcome, welcome once again. So the entire essence of this training is to show you guys, or to statistically prove to you that the issue that many traders have is really not strategy. All right. The issue that many traders have is the lack of consistency and the inability to, um, you know, to follow through a particular trading process. So that's what we're going to be doing in the course of this training. I'm going to show you maybe two or three different approaches to the markets, show you how they all interconnect. All right, show you the different angles that you can approach those, those strategies from, and I'm going to show you with results how effective those strategies have been over time. All right, and please do know that all the strategies I'm going to be showing you in during the course of this training, all right, or during the course of this mentorship, are strategies that you can trade from your phone. All right, the strategies you can typically trade on your phone or on your PC, whichever. In fact, even if it's not a MetaTrader platform, you can still trade this strategy. All right. So, without further ado, let's get started. As you may already know, the name is Adetola Freeman, and this is, the 12 weeks of mentorship with Adetola Freeman. So, the first thing that the average trader, or the first thing that any trader needs to know, that any trader needs to understand, is the fact that trading is risky business. All right. When you trade, you're literally placing a, you're basically making a forecast. All right. That's what you're basically doing. When you trade, you're saying, oh, I believe that this is what the outcome of this particular action is going to be. All right. So, say, for example, if I trade maybe candlestick patterns, and then I look at the chart, I say, oh, I believe that this is what the outcome of this doji candlestick pattern is going to be. All right. And then on that, on the basis of that belief, all right, I am able to, leverage on that belief and either make some money or at the same time probably encounter some drawdown or setback. All right. Now, the reason why I'm saying that is scripture says that a double minded man is unstable in all his ways. All right. It means that a double minded person is unprofitable in everything he does, including trading. All right. And the reason why a lot of traders are stuck is because they are double minded. All right. You have an entire library of information, but you've not learned how to properly bring all of them together to form a meal. So it's like I'm having all sorts of vegetable leaves. I'm having all kinds of peppers and all, and then I'm trying to make a soup, and I just pour everything together in a pot, put water, and then I'm expecting that the soup is going to taste nice. It most definitely will not. Right? So what you want to be able to do is to learn how to bring things together in a way that is not only profiting for you, all right, but it's also going to be consistently, something that you can rely on, all right, and bank on in the long run. So enough of the talk. Let us start working. So I want you to imagine something quickly, all right? I want you to picture a scenario where probably it's raining outside, right? There's rain falling outside, and then I place a bet, all right, or we place a bet, and I say that the first person to go across the road, all right, or go across a particular road without getting a drop of rain on their bodies or getting their clothes wet at all, all right, is going to be the winner of that bet. Okay? Now, if you wanted to win that bet at all costs, probably there's a $2 million bet or a $2 million cash prize on the line. All right. And the simple condition is that you need to cross a road, all right, go run across a road without getting your clothes wet. All right. So the question is, how would you do it? All right. How would you ensure that you're able to go across that road, all right, without getting your clothes wet? So if you have any clue, you have any answer for that, you can just type it in the chat box. I'm definitely going to go over it. All right. Okay, good, 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 good. So talk to me, guys. Talk to me, guys. The truth is that if you wanted to run across that road, all right, and ensure that your clothes remain dry, the one way to do it would be to get a really large umbrella. All right. And somebody saying, oh, no, but there was no umbrella in the options. That is where your own initiative comes in. All right. So the Forex market is, or the financial market is what over, it's a market where over $7 trillion is traded every single day. All right. Every single day. Which then means that there is no reason why I should, as a trader, want to come into the market, and probably all I'm concerned about is eating so much of that $7 trillion that there's nothing left tomorrow. All right. Or I come into the market, I trade, and I have nothing left to come back with tomorrow. It's not wise, right? So, what you want to do as a trader is to do two things. The first thing is to ensure that you have what we call capital preservation. All right. That your capital is well preserved. And then, second thing you want to do is to ensure that you are making profit. All right. Now, if one of these two things are faulty, you are definitely going to get stuck. All right. If you don't have capital preservation, you're definitely going to get stuck at some point. All right. And if what you lack is a consistent approach to the market that is profitable, you're also still going to get stuck, no matter how much you try to preserve your capital. Because if you're not profitable at all, you simply are not profitable. There's no fix for it. All right. There's no vaccine, there's no injection that you can take to fix that, other than to figure out yourself, either by getting knowledge or getting a mentor. All right. So having said that, guys, this is where we come into what I want to show you today. All right. Now, price information on the charts are generally recorded using candlesticks or line charts, but for a couple of people like myself, we prefer to use the candlestick chart. All right. Now, what does the candlestick chart represent? What does it tell us? In simple terms, the candlestick chart reveals to us, all right? Let me show you. This is what the candlestick looks like. All right, so you have the body of the candle. Then you have wicks of the candle, all right, where this would be the eye of the candle, this would be the low of the candle. And it is just as literal as it sounds. The eye is the highest point of a candle, the low is the lowest point of a candle, and then this solid body, all right, this solid region is what we call the body of the candle. All right, interesting, right? Good. Now, what you want to be able to do, all right, or let me just say that the strategy that I'm going to be sharing with you guys during the course of this, this mentorship program is a very simple strategy that somehow helps you make, even if not every day, all right, but it helps you make some kind of substantial profit on an almost daily basis. On an almost daily basis. So it features an understanding of candlesticks, all right, and what is going on the higher time frame, all right, which is the daily time frame. And then based on whatever is going on the daily time frame, you can then go to the lower time frames to search for your confirmation. All right. So that's typically what we're going to be doing all through the course of this training. We're going to be looking at, all right, what does price want to do on the daily time frame? What's the direction on the daily time frame? All right. And then we simply just flow in that line. Let me give you an example. It's like, probably you work at an office and then you're able to predict the mood of your boss at work that day. All right. You're able to know, oh, he's in a good mood today, or she's in a good mood today, or nah, this guy is in a terrible mood today. Probably he left home without breakfast, or he caught his wife cheating, or, he found out that his three children are not his own. All right. After secretly having them tested. All right. So you can be able to, if you are able to read his emotion or read his mood, you're most likely going to be a well-performing staff, because you will learn how to avoid getting in trouble with your boss. All right, because at that point in time, you're able to know that, oh, this is a conversation that I should not have with this person right now because of the mood that this person is in. All right, it's not that the conversation is stupid. All right, it's not that the conversation is silly. It's just the fact that this person is not prepared for such a conversation at this point in time. All right, so that's the same thing we're trying to do. So understanding the trend on the daily time frame is more like trying to get to know. All right, we're simply trying to know, oh, what is the mood on the daily time frame? All right, we're trying to find out what's the mood on the daily time frame. And then once we're able to figure out the mood on the daily time frame, it then becomes easier, all right, to position ourselves from the lower time frames so that we can be able to benefit from that mood. All right, benefit from that, the current state of that market. All right, are you guys with me? So having said that, what I simply do, all right, if you're trading on your phone, probably you're trading on a mobile device, you may not be able to have access to the super trend on the MT4, MT5. All right, I'm going to show you a fix for that as well. All right, I just need you guys to follow me closely. Just follow me closely. So we have the super trend indicator showing us, all right, this is the overall trend, all right, and that's on the basis of whenever prices is trading above the super trend, all right, we conclude, or we assume, all right, or we believe that the market is bullish, all right, and then whenever price is below the super trend, we believe that the market is bearish. Remember, I began by saying that what we do as traders is to trade based on belief, right? Based on belief. The reason why you would pay someone to take their signals is because you believe them, all right? So typically as humans, all right, we're creatures of belief. We want to be able to do things that we believe in, all right? So as a result of that, what you do as a trader is still going to be tied to your sense of belief, all right? Your ability to believe, your capacity to believe, all right? So when price trades below the super trend, we believe that the trend is bearish. And it is on that note, all right, let me clear all of these drawings. All right, so it's on that note that we begin to extrapolate what we're seeing. All right, so let me show you something. This is the daily time frame, and you can see that right here, all right, at this point, all right, that red candle, we could confirm that price has now broken below the super trend, all right, which is why the super trend is now above that candle with the color red. All right, so we've drawn the line on that candle. So let's check on the 1 hour time frame how that looks. All right, although our entry time frame is most likely going to be the 15 minutes, but let us see how that looks on the 1 hour time frame. So this is the area we're talking about on the 1 hour time frame. All right, this region. Now that that has happened, all right, my entry is not, I'm not just going to take a random entry and say, oh yeah, this thing is ripe, I want to enter the trade, I really want to jump in. All right, let me just remove this. Because when a candle closes, all right, when a candle just, newly closes, what we usually have when the next candle opens or during the next candle is that price is oftentimes going to retrace. All right, price is most times going to retrace into the body of the previous candle. All right, I'm sure you would have seen that if you go to the daily time frame, you'd see that happen. Trace into the body of the candle and then go in the direction that it really wants to go. Right. So in this kind of a scenario, I want to show you what happened. So price crossed below the super trend. All right, this is the super trend on the daily time frame. All right, and then we had our previous area of supply right here. All right. So what do I notice next? In order for price to get into the supply zone, all right, in order for price to come into the supply zone, if you look here, you would see that the Asian eye was taken. All right, price took out the Asian eye as well as this sell side liquidity. All right, came into the supply zone and then it began that move. All right, that all important move. And if you want to, if you want to mark this with your position size tool or with your short position tool, you'll discover that this has already done more than 1:3. Yeah, this was 1:3.46. All right, yeah, Dean, I'm going to come in. I'm going to come over to MetaTrader and describe what I'm talking about. Okay, Mr. Kudus Ajala, it's lovely to have you here. It's very, very lovely to have you here. So now remember that what we just entered, all right, this trend, all right, this trend has just newly shifted on the daily time frame. All right, which means that if this is real, all right, if that shift is very, very real, what we should have is that price is going to be targeting the, a very near demand or supply or area of interest on the daily time frame. All right, which could be that fair value gap or maybe even the week behind that fair value gap. So back to the 15 minutes time frame. You realize that by the time we are closing this trade, we are targeting about 1:5 risk to reward. Yes, about 1:5. Mr. Fatah, it's good to see you. You're welcome. So for me, Euro USD, I think I might want to take a re-entry from here. All right, there's a super trend indicator there. I'm sorry, there's a supply zone there. So I want to see price come into this and then keep going. All right, this should also be about 1:3, if not more. Yeah, so let's see, it's actually more than 1:3, or 1:4. Yeah, that's about 1:4. So looking at this right now, you realize that what we're simply doing is the super trend tells us, oh, based on how the previous candle closed, all right, that previous candle on the daily time frame, based on how it closed, all right, we think that the next candle is going to be bearish. All right, we just want to assume that the next candle would be bearish. All right, and then based on that fact that we have, or based on that that belief, all right, we come to the lower time frames to look for what will be the likely reason, or where are the likely areas where that bearish trend will begin. All right, is it going to start from a supply zone? Is it going to start from a trend line? Is it going to start from a fair value gap? Is it going to start from a Fibonacci retracement level? All right, all of these are valid questions. Do you get it now? But one of the reasons why I think it's going to do that from here is because if you're familiar with the way I trade, all right, which you probably are not, all right, but if you are familiar with the Templars trading strategy, you'd recall that there's something called the sweep break retest, all right, or the Quasimodo pattern, which is typically what I'm trying to trade here. Sell side liquidity from the top of that week, price comes into the supply zone, then we get another 1:4. Uh-oh, Lydia Bright, it's good to see you. It's been a long time. It's lovely seeing you guys. All right, do you guys get it now? So what we're seeing here is, I believe that EU is still bearish, all right? And when am I going to change my sentiment? I am going to change my sentiment at the point in time where, you know, EU breaks back above the super trend, or the daily time frame super trend. All right, that's when my sentiment will change. Let me show you this. Because I know someone is probably saying, all right, I've seen this example. Show us another one. All right, I want to see what has happened in the past. Oh, Rodrigue, my good friend. That's the Templar. Lovely seeing you, my man. All right, guys. So, if you look at this, all right, you see that here, the color of the super trend is green. All right. And because it is green, what does that mean? It means that the trend is bullish. All right. Now, if the trend is bullish, remember, what are we looking for if the trend is bullish? We want to see price sweep the Asian low, all right? Sweep the Asian low and then come into a demand zone. Interestingly, price also came into this second demand zone to give his reaction. All right. So price came into the first demand zone. Let us see, did we get 1:3? All right, that's our entry. Let us see, did we get 1:3? Yes, this is even up to 1:5 or 1:6. All right. Then let us see the second entry. Were we able to still get both 1:5 or 1:3? Let's check. That's the demand zone. All right, that's the demand zone. These are entry, and then we're checking. Yes, we got 1:5, even on this second trade. So what does that tell you? It tells you that to a large extent, all right, trading this way is quite lovely. All right, at least if you're trading the Forex market, all right, this is one of the simplest approaches to trading that I have ever taught, that I've ever seen. All right, you're simply looking at, okay, what's the super trend direction? And then based on the super trend direction, you wait for the sweep of the Asian range and then enter your trade. So for my MetaTrader friend, all right, I really wish I could share my MT5 screen right here. I really wish I could share it. I really wish I could. Hold on. Let me see. Let me see how possible that would be. Empty, empty house, empty street, an empty house, a hole inside my heart. I'm all alone. The rooms are getting smaller. Oh yeah. I wonder how. Wonder why. Wonder where they are. Days we are, the songs we sung together. Oh no, oh my love, more than none forever. Searching for a love that seems so far. So I say a little prayer. No, my dreams would take me there, where the skies are blue. See you once again. All right, hold on. I'm going to try to share. How do I do this? Mm, okay, so let me just do this. All right. So for my MetaTrader folks, okay, Fatah Adewumi, I'm going to show you how to locate it on TradingView. But for my MetaTrader folks, all right, this is what you can simply do. All right, instead of using the super trend, for those of you that use MetaTrader, you can simply use the moving average divergence convergence indicator on the daily time frame. All right, this indicator, the MACD. All right, the settings you want to use for it is not the regular settings. You want to use 12, 26, 5. All right, your fast EMA is 12, your slow EMA is 26, your SMA is 5. All right, are you there? And you most likely want to apply that moving average to the MACD. All right, you most likely want to apply it to your median price. So if you do that, you'll find out that the market has been bearish since this particular candle on the daily time frame. All right, since this particular candle on the daily time frame. You guys get it now? So if you want to use a MetaTrader, all right, you can literally just use the MACD and then just flow with the MACD. Oh, I wasn't showing you guys sin. Sorry. So this is it. Looks like, all right, the MACD. This is what the settings looks like. All right, 12, 26, 5. And it's applied to your median price. It's applied to your median price. Um, Hold on. I think some of you are not seeing what I have on my screen. So Okay, so yeah, this is the settings. All right, as you guys can see, that's the settings. 1226.5. All right, 1226.5. So once you've done that, for trading view guys, all right, for the trading view folks, you simply come here over here to indicators. All right, you click on it. Once you click on the indicators, it's going to open up a window. All right, it's going to open up this window, and then you simply want to type in that window super. All right, so once you type it, this first one, the super trend, you see that there are no figures in front of it, no link, no figures, and that's because this super trend was created by the TradingView team. Right, the TradingView team created this super trend. So typically what you want to do is click on that, all right, and then it's going to pop up on your screen. But I already have one, so I'm just going to take this out. You guys get it? Okay. Yes, so I think we're on track. We're on track for a bearish EU. Let's see how that pans out. If price should break above that, that supply zone, break above the, that channel, all right, that flag pattern, then we know that it's intending to go a whole lot higher, all right, possibly into maybe somewhere around here. Yeah, possibly into somewhere like this. You guys get it now? So that's typically what we're trying to do. We're trying to be able to use the direction on the daily time frame. All right. We're trying to use that as the basis for our entries on the lower time frame. All right. Do you get it? Yeah, Fataya Dewumi, do you understand now? Do you get how to set up the trading view now? So trust me guys, this system, this strategy, as simple as it is. Okay, yeah, let me show you how to get the Asian range too. Still on that indicators tab, you go here and then you type ASIAN, all right, Asian, all right, and then it's going to show you the one you're interested in is this first one, the Asian range by NICO 948, NICO 948. All right, that particular one is the one you want to use because that's the one that I use, right, and that's the one that I've at least have tested um, quite well. Right, so Asian range by NICO. So once you set that up, remember for your risk management, you're targeting 1:3, all right? And it is not recommended that you risk more than 0.5% of your capital on any single position, all right? So for each position that you open, do not risk more than 0.5% of your account, all right? Worst case scenario, you're greedy, you want to be Elon Musk in the next 1 year, all right, that's when you should use 1% or 2% of your account. All right, but the basic or the standard approach is to use about 0.5% of your portfolio. That's why trading is not something you should start with, say, $10, $50, all right? Because your margin for risk is a lot smaller, right? It's a lot smaller. Is this strategy good? Yes, right? But like I said, we do not control the market, so it's important to be wise or smart, all right, and be able to know what exactly it is you're doing. Do we get it now? Am I making sense? All right, I'm waiting to see your comments, guys. In the meantime, let's check through a couple of commodities. Oh yes, 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 yes. There are settings for the specific settings for the super trend. Hold on. I'm trying to open up the settings so I can show you. The Asian range by Nico 948. All right, so Dean, this is what the setup is. All right. ATR length is 3, ATR factor is 1. All right. Time frame is set to 1 day. All right. You set the time frame to 1 day because that's the main thing that I want to see here. The time frame is set to 1 day, and then you click OK. All right. So see, AUD became bearish here. All right. Price has confirmed that from the super trend. Okay. And then what do you see? Price takes, it sweeps the Asian range. All right. It sweeps the Asian range into this supply zone. Now you see that? Did we get more than 1:3? Definitely yes. Right? It swept above the Asian range. Then if you come here, you see again that price is still bearish. All right? And then the Asian range, the top of the Asian range gets swept, which means that we would have just waited for price at the nearest area of supply. All right, at the nearest area of supply. And what do you see? Another drop. All right. And you see that when this particular Asian range was created, price did not sweep the upper part of that Asian range. All right. So in this case, what we have is another modification of our entry, using a scenario where there was no sweep of the Asian range. All right. But you were still able to enter your trade nonetheless. So here, AUD card, we have a supply zone here. All right. Then we had another supply zone somewhere here. All right. And you see that when price tested this one, before price came back, maybe next week we're going to talk about the Asian range in more depth. All right. So you see that the low of the Asian range was swept. The previous low was broken, meaning that this is a strong area of supply. Let's see. So from that area of supply, were we able to get our 1:3? Yes. In fact, we got about 1:4 from this particular entry, as little as it looks here. And then you would see that price came back into this second area of supply, all right, just before the Asian low was swept. And can you see the momentum of that drop that is happening right now? This is live market scenarios, by the way. This is not simulated in any way. All right, this is not a simulation. This is what is going on. This is what's playing out in the market right now. All right, and then you can see that drop. So with this, you're already about 1:1 in profit. All right, already about 1:1 in profit, and price can just keep going. It just could keep going. All right, so there are a lot of examples that you guys could get to see. A lot of examples that I could get to show you guys. Let's see if there's anything on Euro AUD. Yeah, beautiful. From this Euro AUD, what do you see? What's our overall trend right now? From Euro AUD here, we can see that our overall trend is what? Bullish. All right. So if our overall trend is bullish, what are we waiting for? We're waiting for price to sweep the low. All right. And did price do that? Yes, it did. And after that, price came into this demand zone. All right. Price came into this demand zone. Did we get our 1:3 or not? Yes, we did. All right. And once we got our 1:3, the new area of demand shifted, all right, and then became this area here. All right, became this area here. And you see that this was the Asian low, all right. This did not actually sweep it, but this was another Asian low from another day. And you can see that the low here was swept, all right. The low here was cleanly swept. Came into the demand zone and did what? We got way more than 1:5. Are you guys seeing that? All right, and then going on, you see that, oh yeah, Asian low was swept here. All right. I don't know what demand zone. I'm not sure if there's a demand zone here. I'm going to have to check. Asian low was swept again. Price probably came into this breaker block. All right. Although for me on Euro AUD, this is the demand zone that I would have preferred to work with. All right. This is the demand zone I would have preferred to work with. And the reason why is because that demand zone would afford me the ability to be able to, follow this. All right, to follow that, which is this was a sweep break, and this was supposed to be a retest, but then price switched it up and then used it as a sweep of liquidity. So this demand zone is something that worth looking out for. All right, so I'm thinking price would come into this demand zone and then we'll get another 1:3. Now, one of the advantages of this particular strategy is that if you are a day trader, all right, you want to be able to trade something during the day, all right, and you specifically live in a region where probably you wake up after the Asian session, maybe immediately after or maybe a few hours later, like we do in Nigeria here, all right, which is GMT +1. It simply means that coming to the chart most times in the morning, I'm already getting a trade as early as 9, 10 a.m. All right. And that makes a whole lot of sense. I'm telling you, it makes a whole lot of sense. All right. So talk to me, guys. What do you guys think about this approach, this strategy that I've showed you guys so far? All right, you guys can see this is GBP AUD. Sentiment changed over bullish. we had our demand zone here. All right. You can see the Asian low was swept for price to come into the demand zone and then move. We had more than 1:3, and then price created another demand zone here. All right, you see that the Asian low was also swept. All right, Asian low was swept into this. Can you see? And then we got even way more than 1:3. Now, I'm trying to figure out where the demand zone is, but I think it should be somewhere around here. So what does that mean? It means that GBP/AUD could come into this and then bounce, and then we're on our way home. Yes, Mr. Fatai, the essence of, if you know me by now, you understand that I will not teach something that is not simple. All right. In fact, the reason why my academy is named Easy FX Academy is because the aim is always to simplify all of the concepts that have always been problematic for people. Do you get it now? All right. So to answer your question, Mr. Kudus, this mentorship program is going to be happening one session per week, every Tuesday by 2 p.m. All right. Every single Tuesday by 2 p.m. we have a session. All right. The link is only going to be shared in my private Telegram group. I think you can find the link to the Telegram group in the description. This video is only going to be live on my YouTube for the next about 1 week. All right. After 1 week, I am going to hide this video from public view. All right. So if you can find this video, or if you can still see this video on my channel, then just know that probably the 1 week or the duration has not yet elapsed. Yes, when the Asian low is swept and the super trend is bullish, what you simply just need to find is the demand zone. You want to look for that key demand zone that price is going to react from. All right. And if it's a bearish market and the Asian range gets swept, all right, you want to look for the key supply zone that price is going to react from. Okay. So I'm here thinking that probably the next session, we're just going to go into detail, all right, and look into what exactly is the Asian range, all right, and how does it work. I think I'll probably just do that as my next, as the next week's class. All right, because here you can see that, yes, we're in a bearish trend as confirmed by the super trend. All right, this is our Asian range. All right, price sweeps the eye of the Asian range, and we have our supply zone here. And then you can see, boom. All right, this is about 1:6 or 1:7. All right, such that even if someone was saying, oh, but price did not react when the Asian range got swept here, I would have lost my trade. You realize that whatever you lost from here, you would have easily recovered it in multiples, all right, from your subsequent trade. So, guys, does this make sense? Let me know, guys. Does it make sense? You were the treasure that I see. You were close to me, yet I did not know. The love that I seek many years was right beside me, yet I couldn't feel it. When I close my eyes, I see you coming to me, my girl. But it hurts me to see you go. You made me cry. When you said you were going, I cried. Thank you, Mr. Ajala. Thank you, Dean. Thank you, thank you, thank you, thank you, thank you, guys. Thank you, guys. The link is in the description of the video. All right, or better still, let me just type it out in the chat box. Um, hey, Mr. Fatai, I usually would not. I don't think I'm going to be looking. I'm going to be doing analysis during this mentorship call. But well, it's the first day, so I never dropped that as part of the ground rules. So let's just see. And you see, the interesting thing about this trading strategy or this trading approach is the fact that if you're trading like this, or if you're trading with this system, all right, to a large extent, your risk is going to be very, very minimal. Very, very minimal. All right. I think this was my setup on GBP card last week. Did 1:3 before it got swept by the news. Price has swept the eye. Come back for a retest. Well, if I wanted to trade GBP card, this would be my entry. All right, that would be my preferred area of entry. All right, because of the sweep above this eye, the break of structure here, the break above this eye is a really crucial break. All right, it's a really crucial break of structure. So I would have probably waited for price to come into this region, all right, before taking my trade. And of course, if you check it with the Fibonacci, that should be around 76%. All right, that's around 88%. So price comes into this, gives me what I need to see. It will most likely sweep liquidity from this low, right? Comes into this and then bounces. So I think that's my sentiment on G card. All right, let's see. Yep. So guys, that's GBP card basically. That's GBP card for me. I think yeah, your sentiment could be right. All right. The only issue or the only challenge that I'm having right now is the entry. All right. The entry is a bit off. Okay, Caleb, you probably joined the session a bit late. So what you do, please watch the recording again. All right. I think it should bring some clarity into whatever you might not be getting just yet. So yeah, all right, guys, it's been 1 hour, 60 minutes of my time dedicated to showing you guys something really amazing and remarkable that I believe could help simplify your trading journey. All right. So having said that, thank you so much, guys, for joining me on this call. It's been an absolute pleasure speaking with you guys once again today. So without further ado, I'm signing out. The name remains Adetola Freeman from EZFX Academy. See you when I see you next week, and God bless you guys. Bye bye.